Hello everyone, and thanks for tuning in for another market outlook by Exness. My name is Andreas Semestocleous, trading specialist here at Exness, and in today's video we are going to be checking on a possible trading idea for the week ahead, the narratives behind it, and which economic data could potentially affect this trade. But before we proceed, let's check on the performance of last week's idea. So the idea was for a buy on crude oil with a target around $71. The idea was fully accurate with the price reaching the target late last week. Now for this week, we are looking at gold for a potential buy trade with a target around 2,670. The price has aggressively corrected to the downside in Monday's session after the bullish pullback of last week. The price found support just above the area of the 100-day moving average and the 38.2% of the weekly Fibonacci retracement level near 2,600 and is now trading near that price. The big bearish correction pushed the stochastic oscillator back in neutral levels, while the Bollinger Bands are still quite expanded, showing that volatility is still high in the market for gold. The 50-day moving average is still trading above the 100-day, validating the overall bullish trend. The price target of 2,670 consists of the combination of the 50-day moving average and the 23.6% of the weekly Fibonacci retracement level, making it a major technical resistance area on the chart. The main narrative is the decline in the US Treasury bond yields, which puts pressure on the US dollar, supporting the instrument traded against it. Lower yields mean bonds offer less return, reducing their appeal, and therefore gold, which doesn't pay interest, starts to look relatively more attractive as a safe haven asset. In terms of economic data for this week that investors need to pay attention to are the US Personal Consumption Expenditure PCE index, the quarterly US GDP growth, as well as the manufacturing PMI on Monday. So in summary, the trading idea for this week is a buy on gold with a potential target around the 2,670. The main narrative is the data from the declining yields on the Treasury bonds that puts pressure on the dollar and offers support on the instruments traded against it. The economic data that investors need to pay attention to are the US PCE index, the quarterly US GDP growth, and manufacturing PMI on Monday. Remember, this is not a signal, it is just an idea for a trade. It's not a guarantee of success. Always do your own research and remember to manage risks.